All right. Good morning, traders. Good morning. Good morning. Happy Sunday. You should see my screen. You should hear my voice. You should be able to talk to me, talk to each other. Good morning, Doug. Good to see you, my friend. Good morning, Steve C. Always a pleasure. Tom Cook is here. Good morning, Tom. Good morning, Don. Jamie. Love it. Good crew so far. Good crew so far. I was just looking at my coffee and I only have 2/3 a cup. It's not going to make it. You're going to hear me. You're going to hear me bitch and moan about my coffee running out pretty soon. Morning, John Z. We'll give it just one more minute. I'm chomping at the bit. I want to dive in and see what this thing looks like. Dawn's on a second. Technically, I am too. Tony, good to see you. Good morning. Good morning, Victor. Love it. Great Sunday energy. You've been up way longer than me. Oh, Graylin, so good to see you as always. Happy Sunday to you. All right. Officially, good morning. Happy Sunday. Welcome out to the Options Income Launchpad Sunday Market Insights. I am Scott. I'll be your host. As always, education, illustrative purposes only. Nothing we do or say should be considered recommendation to buy or sell anything. We're not brokers or advisors, and therefore don't give personalized investment advice. Decisions you make based on any information coming from us should be done so at your own risk, yada, yada, yada. Okay, what are we going to do? Good morning, Greg. Let's posture. Let's go through our normal market posture routine. We'll look at the economic calendar. We do need to search. Not today. Tuesday is search day. Why? Well, just because now that it appears dust is settling, though apparently there is Strait of Hormuz escalation. I figured that's where the escalation would be, and ongoing will be, right? Like that seems to be the most critical point of this whole thing. But apparently there is uh, conflict escalating in the strait. So, does that give us the pullback? Look, this thing just marched for 2 weeks in a way that we haven't seen the market march. And there wasn't really much of a catalyst other than like, we there's progress on this elective war. Um, okay, doesn't matter. We don't ask why. We just like to know what. Um, most things are pretty overextended right now. It's a tough place to be late. And so, what will cause the market to have a retracement? Yeah, this is exactly the kind of thing. And as long as it's not like blown out of proportions and like the whole thing reinvigorates, then maybe it's just 2 or 3 days, and it's a flag type opportunity. We certainly have the pull. Anyways, I know I'm diving into like the trading posture before we've even done the market posture, but I don't know about you guys, but if we're going to get some momentum, I'm ready to start throwing some trades down with a little bit more risk. That's what we're looking for out of our market posture. Has it improved enough that we get to open risk and say, hey, look, we don't have to be as cautious now. So we will look to bolster the watch list on Tuesday. We'll be doing maintenance throughout, so we'll start deleting anything that doesn't look like it's giving the recovery that it should. We'll go through our opportunity list, of course, create that. And then lastly, we are now on to section 4. Section 4 in the trading plan loop, risk management, very important one. Maybe we'll even talk about that a little bit. So there we go. Let's get cracking. That's a good starting point, Jamie. I've made that same comment multiple times. I agree. There is definite concern. Like it's, we have an ability to explain it with it certainly is indicative that there's a lack of opposition from the sell side, but not even average, not even average for one day since the first day of the whole move. It's concerning. I agree with that. Feels like a bit of a house of cards due to that characteristic. Indeed. Okay. Okay. Let's dive right in. Let's just start looking at the conditions. It always spurs good conversations. Here's where we were last week, and you can see both our score as a group represented by my driving, but I certainly gather information from everybody. So our score improved by 1.75. It seemed most people's scores did. The Oracle's score also by 175. We moved out of the veering slightly bearish into the solidly neutral. So let's see where today puts us. Let's see. Oh, do I not have performance problem was detected? Okay, that's fair. Let's see. Minus that. Let's get you out to 3-year weekly. And let's get okay. So this is one that, if you remember back here, so between August and February, we were in the red lines. And the red lines you can see here, 1.25, 1.25, 1.25. And it wasn't until we broke. So right through here, actually is more like in this area when we broke blue. No, let's see. Yeah, no, I was at a 1.25 back in these reds. This red is a 1.25. The purple is a 1. In fact, I almost think we should have. What did we do last week? What I'm leaning towards, just as you're like, what are you thinking, Scott? What I'm leaning towards is actually a 0.5 point jump. I see Don went to the 1. He jumped to 1. I am leaning towards, and I'm putting it in 1.25. Why am I doing that? Because it smashed its way right back up, not just into this channel, but already to the upper half of the channel. Anytime you have a channel, I like to just sort of imagine a dotted line just like right through the middle in the same path to sort of say, like, am I in the upper half or the lower half of this thing? Yeah, I mean, it smashed back in. I'm gonna give it a half of a point. Morning, Vladimir. Good to see you, sir. Okay. Okay. Let's get a picture and let's see what the Oracle says. Yeah, I think that was a big move. Tell me what everyone else did. Don said he's a one. Where's everybody else? Where are you? Oracle. And 04 19 26 chart. Okay. Don says my system really wanted to jump to a 1.5. Hmm. Maybe I should send this and then it'll work better. There we go. Okay. Steve moved to a 1.25. Okay, so the Oracle gave it a 1. That's fair. I'm okay with that. It upgraded as well. Not as much as we did. I was curious because sometimes it's more prone to half a point moves than I am. I don't do a lot of half a point moves. But that's fair. Quick and easy. Let's move on. Let's go to short term. And let's go. Okay, Jamie. The I will go in today and I will update the archive to be all the way good through today so that when you download that, you'll have the extent of the history. And then you can copy and paste that into a blank one. I think maybe you could actually just use the one. I don't even know. There's both there, a blank one and the archive. You may have to copy and paste it. But I'll make sure that the full length is there so you can go back. It's worth going and kind of seeing like, hey, how does this thing work around like a different time like this that you know the market got better or worse, or and just kind of see like how the score fluctuates. I think it's worth it to have that, but that's a good idea. Okay, short term. It's so hard to read these right now. Oh goodness. It's like, what is that? Do you call that? There's no trend there, but it's certainly smashed higher. We don't score volume now, right? You'll notice I don't come down here and include that because this is a trend analysis. And I only look at in fact, I almost think I should like create a, like, get rid of the movie net. I don't know. Maybe it's fine to have everything on there that's on there, but the objective is to be as objective is to really focus and hone in on just the trend and the strength of the trend. Keep losing where I am. There it is. 04 19 26 chart. All right. I feel like I should give this another at least a quarter, if not a half. Did anyone go a half? Am I a half point happy right now? We were at minus 0.25. I don't feel like it's that bad for this thing to be back into a 0.25 score, right? Like a positive. It's 1, 2, 3, 4, 5 days. So we broke higher, then broke that high. I'm going to a 0.25. Don said he went 3/4 of a point. I mean, what are we going to do? We got to do something. So I'm going a half a point. I'm going to a 0.25. I am so curious to see what the model does with this, the Oracle does with it. Oh my God. that's the largest bump in the history of market posture. I kind of feel like I should be open to this. I'm not going to argue. It's an interesting thing to see this. Let's read through the rationale together. The short term has flipped back to bullish with strong momentum. Price surged through the 50, 100, 200, broke above prior resistance, printing a decisive expansion to new highs. While the move is powerful, it is also extended in the short term, which tempers the score below strongest readings. So up sharply from a minus quarter point last week as the market transitioned from recovery to breakout. This posture has shifted from neutralizing to clearly bullish. Follow through and consolidation would support a move to 15175, while a quick pullback below 690 would suggest this move needs digestion, would bring the score back to a 1. Okay, I'm gonna let mine get there a little bit more slowly. So Don was feeling like he was a pioneer with a 3/4 point jump, and then the model goes 1.5. Like, bam, there it is. Okay, 1.25. That's so interesting. I was curious. I had no like. I feel like if I were to intervene and be like, "Are you sure you want to go that high?" That it would be like, "Okay, yeah, no, I don't," and it would just drop it down. I think that we've been building this thing and tweaking it enough that now we sort of have to just let it go for a little while. I want to hear from you guys. What are your thoughts on that big of a jump? Look where it is. It's already at a 175. All right, let's keep going. Now here's where it gets interesting. Back to Jamie's original point, and something I've been flagging as well. When we get to the volume analysis, it's so interesting. I think Stephen D is not. Is Stephen D? Are you here? I didn't see him join, but this is always an interesting one, because these three, I'm saying they just wash. A tie, a sell, a buy. They're all stale. Nothing really happened anyway. So basically, I have one day, one above average volume day. This one got close. It was average. But one day. So one above average volume day equals a positive 0.25. Pretty easy. Don says volume stays at 0.25. What's our slope? What does our slope look like? Starts here, ends here. Clearly, it's the buyers have gotten this thing. The whole line's above the action, which is certainly a bullish indication. Okay. Let me get a picture. Oh, you know what? Never mind. I'm gonna look when I come back out. I thought I had made a new chart last week. Let's go 04 19 26 chart. Go put it in. Steve C says volume is a 0.5. Okay. The Oracle says 0.25. 0.25. So we both stay the same there. I am now at a 1.75 on my top half, and Oracle is at a 2.25, a little stronger even still than me. Let's get to the bottom half now. We'll move to a major market analysis. Major market. And I'll move this over here. We're going to go here, reload. Okay. I swear I remember Sorry, I have to go look at something. Um, we'll be on the VIX next. I thought I made a new market posture. Yeah, MP. What does this have? No moving averages. That's what it is. I did want it with no moving averages. I'll try to remember next week. Uh Basic. Puts those back on. Okay. Yeah, it's fine. I don't mind. I don't mind. That's fine. Okay. This is gonna need to be 6 months when we come back here. So may as well get it. Minimize. And let's get the first chart, start talking about this thing. Is it getting better? 04 19 26 charts. There's one. Oops, too far. So what do we have here? Russell smashing back to the top. NASDAQ back into a secondary leading position. S&P in the middle, as always. Dow lagging. Beautiful. That's a great start to break out of where we were in this thing where the NASDAQ was really sort of lackluster. Okay, let's go to 133. 133. Let's get a snapshot of this. We'll drop it in and then we'll talk about it. And look at that. Russell staying, small cap staying on top. That's pretty good. And what did we have? We had the NASDAQ go from the bottom to a secondary leading position. This is looking like showing some improvement here. Very nice improvement. So 66 days. What do we have? A very similar construct. The NASDAQ has moved from a lagging position to a secondary leading position. And the Russell has maintained. This thing is, these are big, these are good jumps. I mean, in like this 2 week period, we're seeing things that are not like blips. We're seeing like substantive interactions in the market. 22. I don't even remember where I was on this one. Where is everyone on this? I was a 0. God, I'm going bullish. I'm going at least a quarter. I might go a half a point. I'm half point crazy for sure today, you guys. Does it not feel like it's looking like son of a gun? I'm at least a quarter, maybe a half. That's where I'm feeling. And this is showing more of the same. We're seeing a magnificent recovery from the NASDAQ. And that's probably the most important point to highlight, that you've heard me say I struggle with the the Russell as a leading force by itself. It's hard to have any expectations that the small caps will just like put the market on their back and let's go, right? No, we need we need more. It's crazy, Don. It does. I feel a little crazy, Don. I'm not gonna lie. I feel a little crazy with. I've never had a that I can remember. Maybe like 10 years ago. I don't know, where it was just like half a point here, half a point here. Here's another. Like, this is interesting. I'm leaning towards the half. I gotta tell you, I am leaning towards the half. How does everybody feel about that? Um, None of them. And then Sandy's guy, Elmo dancing. That's it. It's a half. I'm putting it in. I'm don't fight the bullishness here. Don's like, all right, you convinced me to do a 0.25. Um okay. All right. Uh Anybody want to put out a guess as to what they think the Oracle is going to bump it right now? Someone give me their best guess if they're interested. I'm going back there. Ready? I'm so nervous. Oh, and they only did a 0.25. This is uncharted waters. Where this is so interesting. 66 days shows the Russell firmly reasserting leadership. Agreed. Broad participation across all indices, including a meaningful surge in the NASDAQ. That all makes a lot of sense to me. However, the 133 still reflects prior relative damage and lacks sustained NASDAQ leadership, keeping the environment constructive, but not fully risk on. I don't know that I agree with that. This is the 133. I mean, it was at the bottom and then it moved into a secondary position. Yeah, it's not like firmly leading. It's not up. I I'm not going to ask for a reassessment, but I feel like that actually was a little bit of a misread. I do think that the Nasdaq popped into a leading position there. Okay. Um. Why is this? Yes. What is this saying? Yes to? I don't even understand what that means. Oh, here we go. I didn't call out an overcorrection, but it's saying why is it 0.25, not 0.5? Build on slope, broader confirmation. NASDAQ is participating. NASDAQ is not yet a confirmed leader, 133. All right. I think it'll get there next week. So that's fine. Let's move to the next component. Sector rotation. Let's go update the scores. I am a 0.5. The Oracle is a 0.25. I mean, the Oracle is still an entire point ahead of me coming into these last two. So I don't actually mind that I'm a little bit ahead of it in a couple of places. Okay, let's go to sector rotation. Sector rotation. Are we okay? 04 1926 charts. There's one. What do we see? Big drop in energy. Big pop in technology. Those are two very good things that will help us to sector rotation. You're only negative, Don says. Minus 0.5. Okay, interesting. Yeah, I could see that this one might still stay there. But we got a nice surge in discretionary, but it's still a low. As we look at this here, this is an interesting shift. Let's go down to 133. How do we see things moving, shifting, realigning? What does it tell us that the institutions are doing and preparing for? That's the gist of this analysis. Here we still have materials and industrials Staples is still lingering. We do see technology popping above the S&P. The S&P is here, so barely, but it did it. It made it. Uh, did I take this one? I don't remember. I did. Let's go to 66. Now we'll score it. Yeah, you can see we still have energy coming down. Utilities are there, materials are there. And then all of a sudden we have technology and industrials together, barely above the S&P. We've got communication services not far behind. But even with this move, discretionary made is still a little bit laggy. I agree. I'm giving this a quarter point bump. We saw some things improving, but it hasn't manifested enough here. You know, I mean, it could get a half a pump, maybe no, it's a quarter. It could get a half next week if we saw a surge of growth things. I'm going a quarter. I agree with Don minus 0.5. Um, that's the slowest component, but it did still at least get a quarter of a point improvement. That's a good read, I think. Let's go see. Let's go. Okay, let's take the picture. Let's take the picture. And then let's go to the 22 day. And whoops, let's take the picture. And let's get the Oracle started on its analysis while we just chat about what we see here. Okay, now what's coming down the pipe? Well, I see a surge in technology and a surge in consumer discretionary. Still some strength in materials. We have and still loitering communication services and industrials. So, what are the two sectors that we are going to search first on Tuesday? Technology, consumer discretionary. What are the next two that we're going to do? Communication services, industrials. Which is interesting. They were hiding. I was like, wait a second. And financials. But let's actually add financials to the top tier. It'll be three that we search. First is technology. Second is discretionary. Third is financials. Communication services and industrials, which is interesting because industrials was kind of like the only sector holding up while we just went through our little corrective period. And now they're just sort of staying where they are. So yeah, we want to make sure we go where the money flow is. Sector rotation. This is a continuation week. This is where discipline prevents a premature upgrade. And that's exactly what we're looking for. The discipline to prevent premature upgrades in the market. See, I'm down to my last two swallows of coffee and it's 9:35. It's gonna run out. What's the rationale? It continues to show some improvement, but it's mixed rather than necessarily growth led. I think it is. I think there's more improvement than that. I'm surprised it didn't improve its score. I felt like there was enough there, obviously, because I am improving mine, but I was at a lower score already. So it puts us at the same place. What is it looking for? It remains, it's holding, but not expanding to a true risk on environment. Starting to be risk on, but not fully there yet, which means as we're thinking about our market posture transitioning and turning into our risk management, right? That's what we're thinking. As this expands into risk on, that's literally telling us that we're able to take more risk. Okay. What changed? Tech moved, industrial still strong. I think financials are stronger than they do. But we need tech a little stronger. I think we need tech a little stronger. I don't think we have it yet. Financials are close, and I think they'll move in. I think these three are right there. I think they're right there. So we'll see. Okay. Okay, Mr. Oracle. Holding. Yes. Let's a simple four-factor checklist. But your checklist goes from a -7.5 to a 0. This thing needs to go to a 1. So no, I don't want your bum ass checklist. Okay. The VIX. Let's go to the VIX. 04, 19, 26 chart. This has been an interesting day for sure. I thought I would go up. I thought 1.25 would be where I ended up, and I'm going to end up at 1.5 or even 1.75. And this is going to be at 2.25 or 2.5, I believe. Let's go see. Let's go see. The VIX. 1, 2, 3, 4, 5. So this is where we were. And we got to here and we ended up below it. So we did break that low. No, that's fine. 1/4 point. I'm going to give it a 1/4 point. No, I am actually going to take it to a half. I think it needs to be at least a neutral score. We haven't had like a lower high confirmation underneath this yet, but that lower high would move me bullishly. I am going to give this a jump. I'm going to a 0. I'm going to a 0. Don says he's moved to a 0.25. That's fair. I think having a move into a bullish area makes perfect sense. So I have zero argument to provide. Steve C says 0. Okay. 175. Stephen D. Oh, Stephen D. Good to see you, sir. We talked about you earlier. You probably felt your ears burning. 0.25. 175. Oh, great. It's a big increase, Sandy. To go from a 1.75, which was a big one, to an even bigger, we're up 2.25. Slept in. Well, what are you gonna do? Sometimes you just gotta sleep in. Did I send the picture? What did I do here? I don't think I did. Let's take the picture. And then let's send the picture. And we'll see the final score for the Oracle. New score 0.25. 0.25. Definitely warranted. We all agree an increase was warranted. That's an improvement in the condition. Volatility continued its downward compression back into the 1718 below the moving averages. This reflects a sustained unwind of fear. I call it an unencumbrance. Mine was a 0. Was your AI? Oh, I'm sorry. Mine was a 0. AI is a 0.25 right here. New score 0.25. So it matches yours. So it's transition from normalization into early stage calm. Yes. What would improve it? It's funny because the Oracle always thinks in terms of like drifting lower. I think in terms of a lower high would actually be a phenomenal confirmation. So if, let's say, like we've been talking about, the market has a 2 to 3 day pullback based on, some perceived escalation in the Strait of Hormuz that, hopefully plays itself out pretty quickly. That would be the kind of consolidation that would pull the market back, give us a bunch of setup signals, and move the VIX up to give us like a sense of what's the next high zone that it's testing. I think everything's kind of moving into position for some solid trading conditions as of right now. Um, a reclaim of 20 plus quickly. Let's see if 20 is enough room. 20 plus, I'm actually okay. I'm saying 22. If it stays below 22, even if it gets there quickly, so let's say it gets there in 2 days, 22. I'm way okay with that. That's still underneath this little zone here. I would actually be okay even getting to 23. Anything in that zone that rolls over, that's our last true high back here. This thing down here didn't really do anything. So I haven't changed it yet. Sorry, Don. I need to update it. So that would definitely be a lower high. Let me go finish. Whoops. Let me go finish updating our. It was a very interesting day today. There it is. We both improved 2.25 points in various areas. Some of mine were bigger. It was very interesting today. I actually liked it because I've had times where I'm like, I don't want to feel like I'm building an AI model that just mimics. I want it to bring something to the table where it's like, hey, Scott, I just moved short-term trend by 1.5 points. And it's like, all right, okay. Uh that could definitely be the shakeup that brings a unique perspective. I don't want to build a confirmation indicator that just confirms whatever I think at the time. I want a challenge in there, right? Does that make sense? I hope it does. Okay. Stephen D, final score 2.5. Ooh, Stephen. Is anyone more bullish than Stephen? Is anyone less bullish than me? I'm a 175. My volume. No, my volume actually stayed exactly the same. If you remember, Kent, if you remember, we nullified the first 3 days that were at the very left hand side of the chart, stale, just like a buy, a sell, a tie, and then we only had one buy day. I think somebody said they had a higher volume. Mine's only a 0.25. So yeah, there it is. Let's go. Let's go build a watch list. And we'll probably have a little time to pull up our risk management plan and go from there. All right. Okay. Volume versus VIX. So the AI. Oh, ooh, yes. Okay, hold on. The VIX, the AI volume, maybe. You're right. Let me go check. That's a good call out. Hold on. Let me go back. Oops. Let's go back to volume. Yes, you guys are right. My bad. My bad. Um, so it actually improved 2.5, not just 2.25, 2.5. Um, sorry, good call out, Don. 2.5 final score. One remaining negative component. We got rid of I got rid of one, two, three. I got rid of two. And we're down to one final remaining negative component. All right. Okay. Um, let's go take a look at our watch list. You and the Oracle are seeing it the same, Stephen. Love it. Love it. What's on our list for today? Alcoa is on my list still. 419. Start with the double A. Just made a new high. The earnings came in. They fell short and they gapped down, but they didn't really get beat up that bad. So they may have had good guidance to offset that. Um, I see a higher high, higher low combo, and I'm still willing to give it a shot. Apple's bullish enough. We need a pullback, and we need it before earnings in time to give us a trade. If we see a pullback in the first few days of this week, I would actually be open to that. Archer Daniels feels a little sideways now. You can see we failed to get a new high. We failed to get a higher low. I'm going to hold off on that. AMAT, I definitely like. And I'm looking at for an early possibility. AMKR, ooh, we just don't have time. We don't really have time for a move before earnings. I'm going to hold off on that one. Amazon, I think we still have time, but it's got to be a signal has to come in the first half of this week, or else it's just not going to be able to get there. APH. And that's the problem, right? We know we're firmly entrenched now into earnings season at this point. So what are we going to do there? It's hard to know. ASX, I will definitely look for another trade on ASX, having just had a good one. AXP earnings are coming. Baba. I'm putting Baba on my list. I would trade it on a pullback. BAC. Yes. The list is any of these that would pull BCS. I'm going to hold off because I have enough financials. That's close enough to earnings. Citigroup is a yes. I don't like Caterpillar's. I don't like Caterpillar's options. If we find some good new stuff when we search, I'm going to drop Caterpillar. CF, no. Sienna, put that on my list. That actually was a potential opportunity on Friday, and one I was looking at for an early possible trade. Coherent, not yet. Too extended. Cisco, you guys know I like Cisco. Delta, no. Diamonds, Dow. The Dow punched me in the teeth. I didn't like it. Ford, no. It's just kind of when you're like, Scott, why are you saying no? And I hope you can just kind of see, is this sort of like we don't have anything consistent yet. Even if I got at this point like a true pullback to support, then I'm like, I'm at earnings. I don't have time for it. Gabe said I was considering removing Ford from the list completely. You know what? I agree. It's gone. Gabe, it's gone. We're cleansing. We're cleansing. I agree with that sentiment. Whoops, what did I just do? I don't want that. Let me erase Dow. Actually, it's funny. It's not letting me delete it right now. Why can't I? There we go. Now it's gone. Now there's smoke. GE's at earnings. We got to wait there. Gold, no. GM. I would consider GM on a pullback, but we're going to, again, it's going to run smack dab into an earnings window, right? Google. I'd like to see if Google could come into play. I love trading Google. I like Goldman. Goldman's there. Home Depot, no. HL, no. IBM, after earnings, maybe. Intel, after earnings, maybe. Lumentum, no. LRCX, after earnings. MasterCard, Meta. I think we have time for a Meta trade before earnings. Monster. That actually looks pretty reasonable. I don't know how those options look. We'll come back to those. Morgan. Yes, I like Morgan Stanley. Microsoft. I think Microsoft looks nice. I love the fact that Microsoft popped. Can it pull back and give me a trade before earnings? Maybe. Maybe. Micron is a yes for me. Full recovery, looking for the pullback. And let's go take a look. Peter thought I forgot about him. Marvell. I like Marvell. It's overextended, but on a pullback for sure. Where's earnings? Yeah, we got time. I like it. I like it. Let's add it to our list. We've had Marvell before. I mean, it kind of comes and goes sometimes. But where we find momentum, we watch momentum. That's our policy. Netflix gap down on earnings. Let's just kind of watch that for a little while. Linda says, what about silver? Silver's on the list. Let's see what it looks like. Nvidia, I'm a yes to. Nvidia, like everyone's like, oh, AI, it's no longer a thing. Nope, sure is. Look at TSM. Look at Nvidia. It's still a thing. We had the New York Times. You know what? I put it on and it just kind of meandered in a weird way. And I got a bad vibe from a couple people. So you know what? I'm kicking it off the list for you guys. It's gone. It's gone. It's off the list. Palantir. Nah, if there was one trade that I'm kind of like, I might still trade this to the downside. This is one. This is one. Palantir is struggling. Look at that magnificent NASDAQ. Bang, making the move. Rocket Lab, bang. Let's put it on our list. We've had some good trades on Rocket Lab. You can see back in the end of last year, we pulled the trigger a couple of times on this thing and made some money. So I would love to see it reinvigorate into that style momentum. Ross Stores, it's kind of a grinder now, right? You can see it's not really giving good swings. It's just meandering higher. RTX has earnings. Silver, it's just real sideways right now. The precious metals had like this crazy boom. Then they busted out a little bit. Not a huge bust, but a good bust. I'm still watching. I'll tell you this, Linda. Precious metals and I, we don't, we've had conflict. We've had beef through the years. I don't know why. I try to be genuine in how I approach, how I trade precious metals. But for some reason, I just it's one that it's a commodity I've struggled with through the years that I tend not to trade the precious metals very much. In fact, we had a trade on gold, and it was Glenn's trade that we put out as an alert, and I just took it and rode with everybody else. So, anyways, is that Macy's? Is that company still around? It's trying. It's actually, you can see it's something we've watched before. Hard to trade a slow mover over 10 days. Yeah, it is. I think it's really, everyone's just kind of like, I don't know what we want to do with this right now. Do we want to think it's defensive? It's an interesting one. SanDisk. These guys stay pretty strong. I'm gonna keep them on my list and still put them on. Favorite for covered calls. Oh, that makes sense. Okay. SNDK on the list. STX, not yet. It's a little overextended. SYY, no. TJX. Oh, TJX, maybe. I don't think it has good options. Tesla's another one that I was thinking about for the downside, but now not. Why? Here, I was still like, oh, this thing could stay in this downward range. And then what? Popped out of it. So no, but to be fair, Tesla is actually on my do not trade list. Qualcomm, Peter says, let's take a look. Let's take a look. Qualcomm. I like for me, Qualcomm is another one that this was its consolidation and it finally had its breakout. So I would not be thinking downside. I would think this thing could have a little sneaky reversal where it starts trying to play up again. Back in December and January, everyone's like, "Oh, the market's overvalued. Its PE ratios are okay." Well, all the PEs have come down. They've turned back into little value opportunities that people are picking up. That investors and institutions are picking back up. Why is it looking overbought? Well, it's at the end of its move, right? It just had this bigger move. That's the biggest move it's had. Back here, it tried the same kind of a thing, but actually it took longer and was smaller. And then it just started the next consolidation. It looks overbought. You can see here our stochastics is way up here in this overbought zone, and we're at the end of 8-day move. So yeah. Where was I? Vail. Oh no, TSM. We missed TSM. I like TSM. I'd put it on. EPS. Vail. Maybe. Viking Cruises is looking strong. Look at that breakout. VOD. I like. This would be a stock trade similar to ASX, not options. WDC. WDC actually looks fine. Did I pull up Qualcomm? I heard it, and then I think I forgot to pull it up. Hold on, let me pull that one up. Qualcomm. Oh no, I did. Sorry, I did pull it up. And let's finish up with Walmart. Oh, and in fact, Walmart. I'm putting a star on Walmart. Walmart on Friday was, if I could on Monday, if we have a bullish open, a bullish looking market, despite what's going on with Hormuz, if I could pick it up in here, let's say it opens, if it looks like this, but it has a shadow down in here, then I'd be able to pick it up and be in it as if I got it back here, but be even better off, right? And so I am looking at Walmart for Monday. Walmart's got good options, good overall. We'll see. Okay. Make sure that you download a copy of the trading plan and are working on that. We're almost halfway through the second loop already. That's how fast it goes. Every 2 months, you get a full iteration on your trading plan, which is magnificent to do. So I would highly recommend that. We are working on section 4. Section 4 is risk management. We define trade risk, portfolio heat, number of trades. We define risk adjustments. We define when and how we pull back. It's a really, really, really important section. Make sure you get that well defined. This may be the first time I've ended on time in quite a while. We were efficient as hell today. Amazing work, everybody. Pat yourselves on the back. I'll see you in the morning, 9:30 a.m. Eastern. We're going to transition market posture to trading posture. We've already got a couple things lining up. I'm excited. I feel like, as long as this weirdness that's going on in the straight over the weekend, and that's why a lot of people didn't trade or close trades, is not holding it, but getting us ready to go. Thanks, everybody. Have a great rest of your weekend. See you in the morning. Happy trading.